Hey everybody, we have a lot to go over. We're going to jump into it. So to start with, we had the S&P Futures rally over the neckline. Not what everybody was expecting today, but that's how the cookie crumbles apparently. And we were all waiting for this complete meltdown and test of this 42.50. That is not what happened at all. Sometimes this is what we deal with. We have this game plan. We think we know what's going to happen, and then the exact opposite happens. Nobody thought there'd be an event like this, and then we'd see the market actually rally up. It's good for the market. Bond market was closed today, so we're going to have to take that into account as well. I think that it doesn't really get any clearer than this is a demarcation line, one that we certainly must be paying attention to. This 43.68, 43.69 where we're sitting now, we want to watch. We're going to look at a couple quick indicators and then drill into this. Number one, we are above the 12 SMA. This is the second day in a row that we are above that. You can see the 55 up here, the 22, and how we are acting. Now, what else is important about this is we're going to click off of these very quickly, and then we're just going to talk about the RSI and how the RSI is forming a positive divergence here. Now, you can say what you want, whether or not you believe in them, and I believe in them, and they work, and I trade off them. I actually had a great trade today utilizing one. But if you look at this, you can see how you're setting up here to push higher. This hasn't even flipped 50 yet, and you're already pushing. Now, I find this really interesting that this is happening now. I'm reminded of a time, and I feel like my father when I say this kind of stuff, but in 2003, there was the Iraq War. We were all thinking that the market was going to absolutely get crushed. I was net short. I was short oil because clearly there was going to be so much oil that was going to come in because of Iraq and what happened there with, quote, Operation Freedom. I think that's what they named that one. And the reason I say that is I was dead wrong. And this was 20 years ago. We were long and, we were long so many puts and we really thought the market was going to crack on that. But we did think oil was going to come down as well. And none of what we thought was going to happen happened. I don't know that many people said today that, you know what, we're going to see the market up today. People will show you after the fact and say that they thought that, but this is why you always have to have a game plan and you always have to be fluid. This is exactly why. So I want to get into the details, but I really want you to take that point home that I just made. You can come in with a game plan, but you have to trade what happens. And that's exactly what we did today. And quite frankly, despite the volatility and the way that this was supposed to go, we actually had a pretty nice day. So if you look at what we're dealing with here, you're just stuck in this range. Now, this was the Sunday night close, and we're going to spend a lot of time on the futures because it's all one big trade round. You can see what's leading, and we're going to get into what's leading, but it's all one big trade. And you can see your level right here. Well, that's Sunday's open, where futures open the first time that we get to react. And then what happens? Well, you have that London opening, and what time's that? Around here? Okay, so what happens there? It's the low. So you already have another indicator right there. Tries to get above, can't get above. So this is giving us some indication that maybe we have a problem, tries again. This time it finally flips. You have this green bar right there that tells you, rallies, comes back, does the retest, doesn't get any cleaner than that, guys. That's when you know. And then from there, and you look at how we acted, and we did nothing but lift. As a matter of fact, we made a higher high, which is absolutely crazy. Look at this on the hourly now. Now, this is not the day that everybody thought that you would be having. Let's clean up my 1,000 lines and talk about this. Look at what's happening here. I mean, not many people would suggest that you are possibly forming this wonky left shoulder, head, right shoulder, neckline. Not many people would think that, oh, you're going to have an inverse head and shoulders today. Say what you want. There it is. You're staring at it. Now, one thing I want everybody to take away is you have massive overnight risk. Forget about PPI this week, CPI this week, Fed minutes. They all matter. But everything you knew about inflows and outflows last week, if you're going to carry over into what's going on now, they're all in the back seat. As we all are aware, I look at the market through this stool. And what it means is that I look at the macro, the fundamental, and the technical analysis. Sometimes you're leaning one way on the stool. Sometimes you're leaning another. Macro is the game right now, but macro on a much larger scale. Matter of fact, what are all these ramifications going to have? You have Israel coming out and saying that they're going to have to sell US dollars. $30 billion to go and support their own currency now. So now that leaves us saying, well, we thought the dollar was going to push higher. And if the dollar pushes higher, well, what are we going to do? Because then stocks are going to drop because the dollar is going higher. Well, everything that we're looking at technically is going to change. Or let me rephrase that, has the ability to change. And that puts us in a very precarious position where we're looking at things and saying, well, this clearly is going higher. Well, after today, is it? because now I've got a negative divergence on the dollar. So whether or not you believe in this or not, I do. So I'm going to look at that and say, well, that's something that I want to look at and pay attention to. Bond market was not open today, Columbus Day, so people are going to have to see what the bond market does tomorrow. Market should go higher with the bond market tomorrow. I think that's one of the reasons why we rallied. The issue that you have is you don't know what happens overnight with this war. And let's call it what it is. It's a war. You have a situation here where they have a declaration of war in Israel. They have not had a declaration of war in Israel since 1973. This has not happened. Now, they've had problems over there, but this is a declaration of war. Make no bones about it. There is no, you guys get a pass on this one. Everything's going to be fine by Thursday. This is going to go on for some time. It is increasingly clear if you watch the news. We're sending warships to the area just to watch, apparently, but as a show of force. When you get into geopolitical events such as this, look at the 10-year, I don't want to watch this tomorrow and see how it acts. You're really going to want to pay attention to the statement. You want to see 11:30 tomorrow and what happens with the bond auctions. It's going to be really important because the bond market was closed today. You're going to want to watch those. You need to understand that with Ukraine, this is completely different. Ukraine, you know what side everybody was on. You knew where everybody stood. You don't know where everybody stands on this. It's very different. It's a hotbed. It's a hot topic issue. We had time for Ukraine to understand that this was a probability. No one was prepared for this. And what happened? No one. Now, what's crazy to me is we couldn't even get over 20 today. You still have a lot of overnight risk here, guys, and I want to make that clear before I run into the names, because I want to go through a bunch of names today and how they're acting, and I think that it really is very telling on what you should be looking at. But if you take a look at how this is playing out, I think this makes a lot of sense for people to think about this and saying, okay, I've got PPI this week, I've got CPI this week. This sure looks cheap. Fed minutes this week. I've got 2 wars going on, and I've got a 17 on the VIX. Something's off. So either the risk is off or they're just not factoring it in. I'm going to give you my opinion. I don't think that they're factoring in the risk here. I really don't. And this is an opinion, but I'm just going to say this. I don't think they're factoring in where oil is going to go to over this. And to think that it's just going to be rosy and Russia's going to work with us and they're going to start producing more oil, even though that they're sanctioned, and OPEC all of a sudden is just going to make this easy on the U.S., I think is delusional at best. And this move, to me, is not reflective in how the landscape has changed. Now, people can argue all the points they want. All your data, all your inflows, everything that you were talking about, it all goes away. It all goes out the window from last week because you don't know how this plays out. You have a variable that you don't know how to account for. And to tell me that variable is worth $2, $3, I think this is delusional. And that's an opinion. And I hate giving an opinion and predictions. I'm giving one. And I'm saying that I don't get it. So maybe I'm missing something. You guys can comment below. Let me know. But I felt so into it today. I was watching, I'm like, this just seems like the easiest trade in the world. And then you're watching XLE today, and I'm sitting there going, that's it? That's all you're going to get? I came in short Exxon. I actually flipped it, went long, pulled $1 out of it, but lost 3 on the other side of it. And let's talk about this. Nobody that came in net long today was going to have a good day. You had to manage your net long positions, get in, get out, manage those positions, and then put on new positions, and then mitigate your risk all day long. That's what you did. All day was damage control. Anybody else that's telling you that their longs were okay today, okay, it's just not realistic. So just understand that. And you do not want to change your model around a war and a declaration of war that happens once every 45 years. Probably not the best investment strategy. So it's an outlier. You take the hit, you move on with your life. It's very simple. Don't overthink it. But we have to look at the Exxons, the CVXs, and go, that's what we're going to get out of this? This is the move? And what was even more fascinating to me is I read a bunch of research. I didn't see a lot of research pieces today discussing this and what's going on. There was one piece that I saw that was talking about the Strait of Hormuz, and if I butchered that, apologies, but no one listens to this for my pronunciation skills. If you look at that and how that's playing out, 30% of all oil goes through there. Well, if Iran gets involved, all bets are off. And that's going to take us into the tankers. And you start looking at how the tankers are acting. STNG, TNK. I mean, that's going to be down today. FRO. You start looking at these breaking out, and they're just, in my opinion, they're just starting. I don't know how people think that there's not going to be more risk associated with transporting oil around. So there seems to be a little delusion here, and maybe that's just who we are now. I don't know, but there seems to be a slow read to what is actually transpiring out there in the energy sector. And I would tell you that I would look at that. I would be focused on the names that have pricing power. For me, that is STNG, TNK. These were the guys that we were doing today in the room, FRO. There's some really good day trades in the room, quite frankly. Then you have the leasing of land, TPL. No one even understands what this company does. But if talk about pricing power, they have it. That's where you want to look, who has pricing power now, and they absolutely have it. As far as before we get into the big dogs and what's going on out there, I want to just talk about a couple things. So you're going to see people talk about gold. Absolutely, in this environment, gold goes up. I'm very surprised that we're not talking about Bitcoin, because people would like the physicality of gold and actually having gold, but the fact that Bitcoin is not on everybody's mind right now is kind of interesting. Usually we see that, and we're just not seeing that today, in the same context of being talked about. But you look at gold, is that something that you should be rushing into? I don't know, but you sure came to a level and you held. So maybe we should pay attention to that. And speaking of levels and holding, we're making a higher high on the Nasdaq. And I think that's a really important distinction. I just want to point this out before I forget. I'm back above the 22. I'm back above my 22. I use a 55, a 22, and a 12. You're not over on the S&P. So we have the Nasdaq leading again, and we'll go through this chart. This is one of the relative strength graphs that I use all the time. I just want to see what's going on in the world, and it's just Qs divided by SPY, and just tells you what's happening. People go, oh, it's at the highs. Well, high can always go higher. But to me, this just looks like one big base, and you're getting ready to break out. No one's got earnings increasing like the top 7 right now. No one. So you start watching this, and you start looking at these breaks, and then you come back to this, and you look at that and go, we're back above the 22. Well, and then you start looking at this and going, just forget about the stool for a moment. Right? Never can forget about the stool. But if you just look at this aspect of the stool for a moment, we go, well, we held right here. We're holding right here. We could actually make an argument that there's a positive divergence right here. And now we're back above the 22, and we haven't been there since the 20th. And this is the first time that we're back over. Well, that's actually a short-term buy signal to me on the market as a whole. My problem with that, and you're speaking to someone that does have some longs that they did well with today, they just held them, but I'm looking at that going, do I really want that overnight risk? And this is where it gets interesting, because maybe it's not going to matter. Like in 2003, it did not matter. I thought for sure the market was still going to come in, even though I thought oil was going to drop. It was a really interesting trade. I did not understand the geopolitical problems that was going to lead to. I was very naive with them, and it led to getting slaughtered in oil. But if I look at how this is setting up right now, you wouldn't even think that there's something going on out there in the world. So I would focus on this. I would focus on the SOXX. I don't want to spend a lot of time on things that don't matter and talking about the geopolitical events like I'm a geopolitical expert. I'm far from it. I can basically point where things are on a map. And looking at this, everyone's going to be an expert. Everyone's going to flip from a Ukrainian expert to a Vax expert. It's exhausting. What you want to do is you want to look at what happens, and then how is that data interpreted in the market? What happens, and then how is that data interpreted in the market? That's all you want to do. Not, the market should have gone down. It didn't. Market should do what it wants to do. It's not up to us to tell it what to do. It's going to do what it does. So you can see how you're holding right on the SOXX. Look where we're flipping, the 22. When was the last time we really closed above that? Here. So you're up 30 days. It's been 30 days since we've closed above the 22 SMA on the SOXX. It's crazy if you think about it. And what did it take? Another war. So when you start to see this, you start putting the pieces together. I have my belief on why this is happening. I'll go over it on Saturday, like Saturday's video. I strongly suggest you still watch Saturday's video. There's a lot in there to go over. I cover a lot of ground, but I would certainly be looking at semis again. You should be looking at these charts and trying to figure out what the heck's going on here, but look at Apple. And look at how that's playing out. And I think that this is where we should spend our time in looking at this stuff and truly understanding it. And if you followed the videos on Saturday, and we talked about all these, we're talking about the cyber stocks, the cyber software names. You look at these names and how they're breaking out. This was one we were talking about. Look at it. There was 5 or 6 points we pulled out. We actually did this trade to show you the timestamp from the room. I don't like saying things then you don't actually see what happens. You can see that's 932. You can see that we went long. We did the same thing with FRO, the RIP. That was such an easy trade. But you'd start looking at how this is acting, and it was an absolute no-brainer. And then it traded up, and it gave an indication as why it was going to trade down. I'm going to do a whole video on that. I will post it. Just let me know if that's something of interest. I got asked to start showing ways that I use relative strength in the comments. This relative strength was a great way that we actually got out of this trade. It was glaring. You're in the room, you know what I'm talking about. I can do a really quick 5-minute video and explain it to people so they can take a look at it and maybe they can implement it in their own trading. But to me, this whole space just looks like it's on absolute fire, which was really interesting because this was not the space that was getting the attention. Now, you're going to see the big dogs get money, but what did we have today? 6 or 7 upgrades because the window's over on ARM, and it didn't even matter. Google's been the go-to, guys. It's just going to save everybody a lot of time. Google's been the go-to. Number one stock that I was telling people today, if it bids down $2-3, we're all over it. We got in much cheaper on a swing trade. We're still in the swing trade, but we got a much cheaper, really simple trade, run the neckline, just to be able to get in, pick it off with a real tight stop. And I think we're up $6 in it now. Either way, this is just starting. I mean, you're going to flip here. Some of these charts just look amazing. Lockheed, I got to tell you, this is not my kind of chart. And it's going to be real hard to not look at this if it makes a higher high tomorrow. It's going to be blunt, like real hard to not look at that today. I don't like buying when they're up 9%. I'd rather come in the next day and see if they trade again and then see if I can find a way in. I would rather do that. And I don't think I'm just going to make another prediction. I don't think this war's over in a day. Microsoft, again, you have a higher high here. I think that's pretty fascinating as well. RSI back over 50. I'm just throwing a bunch of names out there, show you what's going on in the world. NVDA, the Biden administration decided that China can have access to South Korea chips, but not US chips. I don't even want to talk about it anymore. But you can see the inside bar right here. You're still riding that 55 and you're trying to flip it. So these are not charts, guys, that look like they're breaking down, do they? Look at SMCI. Does that look like it's breaking down, or does that look like you're about to gap fill and rip people's faces off? And I'm going to watch a bunch of people on Twitter get angry and say it shouldn't be doing that as I make money. And then you have Tesla, and we look at what's happening here. Okay, you keep hitting the 55. I use a 22, a 55, and a 12. You should use what you're comfortable with. But we can look at the market and say what the market should be doing, or we could trade the market and make money. It's really that simple. It's just up to you. For now, understand that you have PPI, CPI coming out, Fed minutes coming out this week, earnings coming out this week, Friday earnings this week, and all of that is a backseat to the geopolitical situation that we have right now. And we have a lot of gap risk in the morning, and we have to deal with it. And on top of everything that I just laid out there, the top stocks out there, the mega tech, are all starting to get above their 55 SMA. That's it.